Hello, Trade Pros. Good morning. Welcome to our morning market update for Friday, February 13th. Um, I've been away for the last 2 days. I really needed some time off. I got extremely violently sick. I remember doing a morning market update and literally, or not morning market update, rather, but doing the course that we're live teaching, the futures order flow course, having a great like 3 lessons. Everyone liked the lessons. I was getting some good feedback. I felt amazing. And then I've never had such a quick turnaround of feeling so amazing to feeling so terrible. I got up, things started spinning. I started shivering, getting like cold shivers. I'm like, oh no, here we go. And I got rocked. I was asleep for pretty much a whole day. Yesterday, I kind of mustered the courage to get back to do the room, but wasn't at full capacity. Today, I might sound terrible, but I'm feeling great. So let's get into the update. I'm going to stop the share at the moment, and then we're going to just turn on the camera. And hopefully it's the one that I want and need. Here I am. Man, it was a terrible virus. I don't know what the heck hit me and how it hit me, but whew, it was wild. This thing going around, it ain't no joke. Be careful. And then my kids got it. And oh, anyways, here we are. Something that was equally as potentially sickening to the market this morning was CPI. The whole morning market update today is based on CPI. And just on YouTube, I want to make sure everything's good, voice and video. It should be good to go. All right. The biggest catalyst this week was the CPI numbers after non-farm payrolls. Now, non-farm payrolls ended up being a strong report. There were some back-end revisions that were adjusted. So it was a surprise that it was strong because it was expected to be actually weaker based on the revisions being removed. But non-farm payrolls came out strong on Wednesday at an off time due to the partial government shutdown. And then CPI this morning was the market mover. All right. And the headline number came out at zero point 0.3 month over month. The prior number was zero point 0.3, so in line with expectations. The core number came at zero point 0.3. The prior was zero point 0.2. All right. And it's decreased according to the prior, but zero point 0.1 higher than the um the expected. And so you could say that it's not a home run lower inflation, but it is lower than expected. And so it is softer inflation numbers that just came out, which is really good. It's pretty bullish thing for the stock market because lower inflation means that the Fed finally has the firepower that they need for a rate cut. So we have to check the rate cut futures. I wasn't able to check it this morning, but guaranteed the chances of rate cuts coming up in the next two meetings have been increased. All right, the market is going to like that, especially on the double end positive of strong jobs report and lower inflation. That's the formula that the Fed literally looks for cuts to the interest rate. All right, so I think cuts are back on the table a little bit more, and this is where the excitement is on the market. So the CPI did come in softer. The headline was that was what I read to you in the beginning was the expected numbers. Bear with me, this stuffiness is kind of throwing me off listening to my own voice. I'm like I sound off, but I'm trying to like go with it. The headline CPI came in at zero point 0.2 versus zero point 0.3, which is lower. All right, and the core number came in at zero point 0.3, which is in line with expectations. All right, which is 2.5% annualized. So the core number is the important one, and that one came in 0.1% lower. It's a positive. It's a Goldilocks scenario where strong jobs and cooling inflation should lead to um, some Fed action. So rate cuts are on the table for the Fed. Well, let's see what else I wrote here. Moran's comments, Fed's Moran, who is retiring this year, said that policy is being more restrictive than we think. That gains credibility. So his statement saying we're more restrictive than we need to be is immediately confirmed by a strong jobs report and then a cooling inflation. All right, this is bullish. The S&P 500 is the best possible outcome. All right, it removes some of the inflationary concerns of a strong non-farm payrolls report. Um, and strong economy and cooling prices, Fed could cut. All right. Tech benefits the most from these lower expectations, and it puts on a risk on bid, which should dominate the tape today, which puts it at a very interesting place. market structure wise, and we're going to turn around and talk about that in a second. The impact on stocks should be bullish throughout the session. All right. For the dollar, it should be bearish. The US dollar should go down, and the yields should go lower. Bond prices will climb, and the yields will sell off. Um, and we should see a drop from the 4.125 10-year yield. We'll take a look at the screens in a moment and see how it's being priced in. After a CPI report, you definitely want to give it a little bit of time before checking the immediate impacts, but we'll take a look at all of that. Bottom line is, this is a risk-on, dovish Goldilocks print. We got everything we kind of needed. The market should get some excitement. All right, that's where we're at here so far in the morning. That's all I really had. There was a number of other news items, but the CPI was the dominant one that we needed to know about. And now we're going to turn around and look at the chart because we got some chart work. I want to pull up some assets in the yields. I want to pull up the dollar as well. And then I want to talk about the story of the US session, the overnight price action, and then the trading plan for today, which will probably shock you slightly, but also the expectations of what could happen today and what I'm kind of seeing early on. It could be just like yesterday shocked us. I think we're in for one more surprise today. And I think everybody is waiting for the market to open to sell it. And I don't think that's the wrong idea instinctually, but I do think that we might end up trading much higher today than we think. So we're going to set all that up. Let's turn around. I'm going to just turn the camera off. Let's get on the charts and let's have some fun with the charts. I love having fun with charts. It's pretty much the only way for me to have fun these days. And pardon the background noises of somebody who was just sick. You're going to probably hear a lot of sniffles and all that stuff. All right, I'll pull up the notes. There they are. Let me just open today's. And let's get through it like this. All right, the story for the US session. Well, oh boy, how do we tell that story? Yesterday in the room, well, let me start at the beginning. How about that? It's probably the best way to tell a story is to start at the beginning. All right, we opened up at 69.80, 75. Hang on. Nope, that's not what I wanted to do. All right, well, it's a bit of a blunder there. Let me turn this back to gray. And how come I can't draw? Okay, there I can draw now. So we opened up yesterday at 69.80, 75. All right, we rallied up a little bit to set the prior day high at 69.92 3/4. You could see it listed here. That's the top print of the day. That's as much of a rally that we got. And we noticed in the room that the rally just kept getting sold off. Every time we tried to hold bid, it would get pumped lower. The other thing we noticed was the NQ to ES ratio and the VXN to VIX, which is the volatility for NASDAQ relative to the broader market. Those two things were giving us very early signals, and not just quiet signals. They were screaming at us, stop buying this thing. It's about to fall off a cliff. All right, NASDAQ was very weak in yesterday's session. I know that AI fears drove a lot of the sell-off yesterday. All right, but it was kind of telling us stop looking for the long. And I didn't do any trades yesterday. I was sim trading it because just for demo purposes, I wasn't feeling that good. Today I'm going to get back on the horse. All right. Then we sold down to our flip zone at the 69.59 area, which is right here. See, I think I just removed that zone accidentally. I'm going to actually close this chart and reopen it after I do this update. But we sold down to our flip zone 69.59, which is right here. All right, I removed it by an accident. We said multiple times in the room that it looks weak, driven by NASDAQ weakness. All right, lots of buying was failing. Selling was just overpowering the book and the charts. And we got a massive dump. The moment we broke below our flip zone, things just got vertically really bearish. And we just got absolutely clubbed like a baby seal. All right, the prior day low gets set at 68.42. Which is way down there. And the prior day cash close, all we managed to do is rally up 9 points to close it pretty much damn near the lows of the session. All right, very bearish day. That was 150 3/4 points from prior day high to prior day low on 2.08 million contracts traded. Strong and firm bearish day to the downside. All right, so what's the story overnight? The story overnight was pretty simple. It pretty much consolidated near the bottom of the range as we waited for CPI. From the prior day cash close, we saw a little bit of extension higher. We tried two little shots to the upside. The second rally formed the overnight high at 68, 68 and three quarter. You could see that here. And then overnight, we kind of worked towards the prior day low. And then we had a few bounces from it, but eventually broke it and set the overnight low at 68.20, right? Which is another 22 points below the low of the prior day yesterday. All right. This morning we had CPI came out slightly bullish, but you're kind of sitting at the moment at 330,000 contracts, quite a bit of volume, and you are getting a bullish CPI print in light of a very bearish day on a Friday, which tends to be a bullish structure day. So here's the trading plan for us for this session. All right. It's a big test for buyers today. This downside was very sudden. It caught a lot of people off guard. Not much opportunity to give the buyers hope, just straight vertical downside push. Any consolidation for the buyers led to sell stops and a push lower. All right. Today's flip zone is 68.90. So we are starting with a short bias. No matter how bullish you think a CPI print is, you definitely, after a bearish day like this, want to give the bears credit close to near-term resistance levels. You don't want to discount them and start buying in the face of a 150-point down day. But you do want to mark a level where above that you might see some buying, and I think it's 68.90. 68.90 is where the rotational consolidation started to hold, and we still held the downside, but you did see some two-way trade. This was just a big giant knife right through price action. All right, and then we started to see more balance around here. So I think above the 90, any strong gains here are buyable on pullbacks. You know, targets up will be the 25 and 45, and I think if the bulls could get us to around the 50 today to close, would be a very good job, very well done, and I think they would be very happy. I do have a feeling we rip all the way to the prior day open into the close day. I just get this weird feeling. I know it's one heck of a call. I just get the feeling we might, but that's only the call if we could get above 90. If we stay below 68.90, I'd love to sell into some of the strength this morning to get started with the session because I think there's going to be a lot of reoffering and reselling into strength before we break the 90. All right, so the levels are the 48 to 51 for me. The here basically 48 to 51, 76 area, and then the last one will be right inside the flip zone. It could go up to 95. This isn't a perfect science just to match some of these tops. So 90 to 95 would be the flip zone. All right. And if we get above 90 to 95, buyers start to catch a bid and we got to start flipping long. All right. And I think we run up the buy stops pretty hard and aggressive. I think we're going to start weak this morning. Remember, bullish days open weak and close strong. And so it's a good idea to be on the downside early on and then flip as price action gets north of our flip zone. All right. It's Friday. Fridays are skewed to the bullish side of things. And we also had a pretty hot CPI inflationary print. All right, looking at a few things on the board here for the S&P. I'm going to look at this on TradingView. If you look at the US 10Y, 10-year yield, you could see the yield prices are actually going down. That's daily. Let's see the 5-minute as of 8:30. Yeah, yields are coming off, which is a reflection of lower rates and Fed cuts. Dollar index, as of 8:30, the dollar has kind of dropped quite a bit as well, as you would expect. So these things are just showing you that the market is pricing in an inflation number that's cooling off after a strong jobs report the way that it should. All right, and last but not least, we'll look at this chart and then we'll set up the levels and do some order flow analysis with the team in the room a little bit deeper. But here's VXN to VIX. This is the volatility metric for the volatility of NASDAQ versus VIX, which is the basically broad market index, and then NQ to ES. You could see NQ to ES is again starting this morning with the weaker price action. So it might be again one of those days that NASDAQ lead us lower into the open and then see what happens. But if you're going to have confidence in a rally in the broad market these days, more often than not, NASDAQ or tech stocks lead it. So it's hard to be bullish without NASDAQ as your participating engine there. All right, I hope you guys enjoyed this update. Appreciate you all a lot. Prashant, good morning. I was sick, violently sick. William, good morning, sir. Marco, good morning, my brother. I hope you guys enjoyed this update and thank you for, having the patience. I'm recouped, recovered, and I'm ready to go just in time for the last day of the week. And it's going to be fireworks, I think, today. We're going to have a lot of trading opportunity. I will tell you this. You're not going to have to force anything today. Today, you can afford to be patient and you won't feel like you missed anything. Take advantage of that. Don't force trades. You're going to have movement. All right. Because you're also going to have some head fake. You're going to have a little bit of noise built in. All right. Compensate for that by saying, look, we're probably going to get a lot of price movement. Therefore, I don't have to be as perfect, as accurate, but I still have to be patient and not overshoot my shot. Because if you overshoot it in the chop, by the time the move happens, it'll move without you. You know how that goes. All right. Love you, YouTube. Have a great rest of your day. Have a great weekend. Thank you so much for tuning in. Trade pros in the room. We are going to keep going with some order flow analysis and tighten up the entries a little more. Traders on YouTube, join us at the Order Flow Vault. Go to tradeproacademy.com and check out what the Vault has to offer. It's been an incredible launch. And I feel blessed I get to trade with this team. They're awesome. Love you, YouTube. Have a great rest of your day. I'm going to catch up with you on Monday. Goodbye. Be safe.